Of course you are. How many people? Well, that's a silly question because it's a self-selected group. But anyway, how many
Yeah.
people do you know that are also black belt in Brazilian Jiu Jitsu?
I know a lot.
You see, it's
Yeah.
self-selected. So yeah,
Yeah.
we can define you as kind of dangerous in a
Sure.
misleading way.
Misleading.
Yeah,
Yeah.
because if someone sees you, he doesn't know that. Oh my God, this guy can make me out into a small pretzel and put me to sleep while
Yeah.
doing it.
Yeah. Yeah, it's possible, but yeah.
Well,
Oh,
I
I
don't know.
think
I don't do
Tony is
well
less
on.
afraid on the street in New York than I am.
Yeah. No, the thing is, the Brazilian Jiu-Jitsu is kind of a really funny sport. I call it a sport. I mean, it's a martial art form, so yeah, you can kind of use it in street fighting. But I'm not training for street fighting. Like street fighting, anything can come up. You can have a knife, people can have a gun.
Mhm.
Like also like jujitsu is a grappling sport, so we roll on the ground. And so if there's like
Yeah.
concrete floor and stuff like that, like I want to get my head smashed. So like I don't want to like I wouldn't say I'm dangerous on the mat, and there's rules. You can't punch and kick me. There's rules. If you follow that, then
Oh
I
yeah.
can beat you. Yeah. It's a sport. Like basketball
So
players are great at basketball they've been doing it for a long time. It's kind of like this. Yeah. But yeah, no, that's one thing I've gained doing like a lot of just because in Brazil just we spar a lot. So I'm basically kind of fighting every class, like 5, 6 guys, different people. And when I started, I had this like ego that like, hey, I can beat people. Like, like I actually wanted people to like fight with me because I can show them how great I am. But later on, you basically get really humbled because like you get your ass kicked by everyone over the course of the training program, and you just don't have this need to like beat people or like to show people how strong you are. And the best is to be safe. And so, like, if I get into a situation where I have to fight, ideally, if I'm in the right state of mind, I should run. Like, there's no good can
humble.
come out of actual fighting. No, nothing good can come out of actual fighting.
Well,
Only best.
martial
Yeah,
art, indeed, especially as you go up the ranks,
yeah,
it's
yeah.
being humble, uh, have control on your ego,
Right, right.
or
Yeah, right.
and
Ego.
control about your
A lot of it is
physical
ego. A lot of
and much
yeah,
more. But when we are talking about
yeah,
control, and we can start the Joe Rogan element of in, of InsurTech, and
yeah.
I would
You're
say,
the Joe
David, this.
Rogan of InsurTech.
Well, maybe only in the haircut, nothing else. I wish it's like no one. Sadly, we keep doing this remote because InsurTech is everywhere. I wish I had like a studio and I was famous enough to tell, hey, fly by in. We'll have whiskey, a cigar, and talk about life for 4 hours. But actually, we all have jobs. But what I wanted to ask David, because Stacy Brown is saying that you're like a black diamond, triple black diamond skier kind of like expert.
Sure. So my primary focus is on the snowboard, but we run an event every year called InsurTech Slopes. This year we actually had it twice. Last week we were in Verbier in Switzerland. Next week we go to Big Sky in Montana. We'll have about 22 or 24 people in Montana. And one thing I learned from Tony's point about, humbleness is not everyone knows their skill level when they're on the ski mountain. So the first time we did it in Utah, we had 3 levels. We had, beginner, intermediate, and advanced. There was about 30 people. 7 or 8 decided, yep, we're definitely like, beginners. And then there was about 2 or 3 people that were intermediate. And then something like 12 people thought they were advanced. There were also some people that didn't go out in the morning. They slept in. And so the 12 people, I was like, I have an idea sizing them up based off of their gear and how they look on the mountain, how fierce they are. And I knew that all 12 of them were not advanced. So I said, let's just go up to the top and we'll sort it out. Like, go over and do a first run and see who fits in the right spot. So what happened is Bob Sargent, who runs eSpecialty, and he lives in Park City. He was kind of our guide, at least for the morning. So Bob and I took the front, and basically he said, we're going to go over to the middle of the mountain for this run that's really nice in the morning because it's not too icy. So what naturally happened is, as we were making it over to that part of the mountain, it kind of broke out into two groups. So there was a group of 6 of us, and then 8 or another 6 fell behind, and that became the intermediate group that fell behind, and then the advanced group of the 6 of us stayed up in the front. And what we realized when we were ahead of everyone, someone asked, hey, are we going to wait for everyone else? And I was like, no, we just figured out our group makeup. So that was how we decided that there needed to be 4 levels. So in Colorado, what we did at the Beaver Creek event is we decided there's 4 levels. There's beginner, intermediate, and advanced. And, there's like some pretty decent people that are intermediate or advanced, but I knew we had to break it up. So the last category, we called it all mountain. So if there is one piece of the mountain that you don't feel comfortable, whether it's in the woods, in a chute, as you mentioned, triple black diamonds, you can stay with advanced. But if you're good with everything, then join us with all mountain. So there was, in Beaver Creek, there was about a group of 6 or 7 of us that joined all mountain. One person dropped down to advanced at lunch. One person bumped up. But I think that's what we learned. The only way to test someone's ability on the snow is look over the edge and see who can make it down. No, just kidding. I think you get an idea after someone does some of the runs.
So I would love to use, that analogy later on when we talk about the startups that you see in your cohorts. Who is a purple belt Jiu Jitsu founder who can handle a triple diamond in scheme in terms of 2022, 23, and most likely 24, what things to come, right? But as we go, before we digest different startups and what you've seen in your cohorts and your investments from your fund, let's talk a little bit about InsurTech New York, how you guys started, because at the beginning you said, we're going to bring corporates, we're going to do this, plug and play are doing that, we're going to build this thing in New York, and there was a little bit in San Francisco. How did InsurTech New York started, and where are you today? Because it's been 5 years.
Yeah, it's been a while. I mean, I think without spending so much time on our background, but like basically David and I met up at a consulting workshop in 2019 or 18, I forget.
Yeah,
I think
February 2019.
2019.
It's in the winter.
Because both of us were actually building, or we are consultants. We were like, we had a consulting, I guess, business, but it was like independent consulting. At the same time, I was like working on a startup, and David with him, he's always working on many businesses. One of them was a consulting business, and then we got together, and we thought maybe we can partner up. So the main idea was David was really good at like product management, like working with tech companies and like building products. And then I was pretty good at like the strategy part, like product strategy, figuring out what to build. And so we decided to partner up, and then we actually started working on and helping different businesses, a few different startups. But one of the kind of the vertical that we really liked was insurance. Mainly like David kind of sold me on this. Like I had a little bit of insurance experience, but not too much. And David had exited from an InsurTech. He was also part of another group called SVIA on the West Coast. I'm
Yep,
sure
I remember them.
You know them, right? Yeah. So, and he kind of sold me on the insurance. Hey, it's a really interesting, I know it sounds boring, but it's actually quite interesting industry. There's a lot of complexity. Also, it's actually like a good industry. You're actually doing good for the world. And I didn't think about it that way, but it's like you're helping people and companies de-risk themselves and like prepare for, some of the issues they might be facing in the future. So I thought that was kind of interesting. And so we started focusing on InsurTechs. Then we hosted an event, which went well. And then we kind of went from there. And so we really like kind of the people we're working with, the companies we're working with, and really wanted to have like a impact and hosting accelerator business, venture business, events like that allowed us to work in many different companies, not just one-on-one like the consulting business was. So I really liked that idea, and we kind of went there.
So
Yeah, one
accelerating a
other
little
piece.
bit forward, sorry to interrupt you.
Yeah.
So today you
Yeah.
have the upcoming conference that is going to focus on
Yeah.
AI and analytics, and that's the third conference that you're hosting. You have
No,
the
this is our
different
fifth annual conference.
fifth annual. Sorry, I'm sorry.
Yeah.
I remember there was one in the Marquise, which a few years ago I thought that was the first one. Apparently, it wasn't. Then you have the accelerator, and you do all kinds of events around that. And you have slopes and couple of other. What was it? The one with the outdoors activities as well.
InsurTech
Did I-
Slopes.
Trails.
Yeah,
it's big
please,
trail.
you list it. Mhm.
Yeah. We also host gross. We're calling it One Day Gross Accelerators. Also, we're hosting. That'll be our fifth year doing it this year. We also do an early stage startup competition, and then we do MGA Lab, which is another accelerator focused on helping startups create MGA businesses. And then we also have a fund. So and small events. We do a lot. We do like 20 different events in a year, like private and public. Yeah.
So let's focus on the upcoming conference. Who's going to be there? How big? How specialty? What are we expecting to see? What's going on?
Go ahead, David.
Yeah, so
Yeah.
we're expecting to have, roughly the same amount of people that we had last year, almost 1,000 people. Our event is pretty unique in the fact that we have a dedicated focus hall for property and casualty and life and health. And the theme this year is really around AI and advanced analytics. And we feel that the insurance industry has a huge advantage over many other industries in the fact that the better they are at implementing advanced analytics and AI on the data sets that they have, ultimately they have a direct impact on their underwriting profit. Many other industries, like you think about airlines like Boeing, or retail companies, or even manufacturing companies, they have all these fixed assets that are committed, and in order to make a change, they have to make a change to production in the future. With an insurance company, at some level, other than some of the regulatory requirements, they can make a change right away, right? Like they can update their algorithms and be able to decide, this policyholders, we really need to require additional inspections to make sure that they have their houses safe for wildfires. Or maybe these policyholders are not good for renewals because they're more likely to sue the insurance company. So the more that they can understand their customers and their prospective customers, the better they're going to be. And the new tools with Gen AI and advanced analytics are giving insurers the ability to do that across the value chain. So our conference really looks at that from every angle, from distribution, from underwriting, from policy servicing and core systems to claims.
Are you also touching the productivity and utility within the company, or mainly focusing on the different services to the underwriting claims? What else can we have there? Well, that's more or less.
Yeah, we do have a number of sessions talking about, workflow automation and how to improve productivity by individual jobs to be done.
And what have you seen so far? Because at the beginning we started, I think, with very specific elements, especially when it comes to AI, right? And now we are seeing more and more people turning towards the Gen AI. Do people understand the difference between AI and Gen AI?
So I would say broadly, people do not understand the difference between AI and Gen AI. And I think a good person that summarized some of these differences online was Adrian Jones. And I think the challenge is the insurance industry actually benefits more from traditional AI than Gen AI, because Gen AI applies to more creative industries. So if you think about it, Gen AI is the ultimate form of autocomplete. So if you are creating content, if you have podcasts or videos like we're on today, or you're doing creative arts, having Gen AI to help fill in the gaps makes a lot of sense. But where traditional AI is important for insurance carriers is about understanding the data that you have. So to use the example of property, a good application of traditional AI would be machine vision. You take a satellite image, you look at a property, you identify hazards on the property, or you identify the impact zone of a claim from a flood. That is definitely not Gen AI, because you're not inventing a new satellite image. You're interpreting the information that you have and reducing the reliance on humans, or making only certain elements human review. In the same sense, document review. If it's a workers' comp claim, traditional AI can help review and identify, is this claim going to really expand and get litigated? And those are the areas that I would say, is more machine learning. How do you actually read through a document, understand what's in it, and be able to make a risk assessed determination? Where Gen AI may play or be useful there is maybe it can make a summary of the case file so you can make a determination. But ultimately, most of the value is in the classification that the machine learning is doing.
When we are looking at AI and, Gen AI, it's the cool thing. AI, I love your answer, especially when it comes to what does it mean to understand what it is and where the algorithm and the implementation in terms of computer vision. Then, of course, you have all the different things that come in with underwriting and understanding risk from one side of, let's say, of a building to another side of the building, and then different types of resolution. One of the things that you see, which I like from Relativity 6, for example, is like, can we understand better what is the class? What's the class risk here? What's the first, the secondary, the tertiary, and the quaternary?
Quaternary.
No. Thank you. The other focus is analytics. How big the difference between analytics and just statistics and understanding what's going on?
Yeah, so I think analytics is very much a derivative field of statistics, but to make the distinction or to kind of create the tree diagram here. So, I mean, at some level, everything is statistics, right? But then, if you're following the tree up to some of the branches, analytics has a number of different types of fields within it, right? So there's quantitative analytics, basically taking information that you have and allowing you to understand it better, right? And then there's also like the qualitative analytics, so taking surveys and information about the clients and being able to understand what that actually means, and classifying things into buckets. So within the quantitative analytics, which I think is where most things are happening if you're in insurance, some things are just reports, right? Like it's simple as you mentioned with Relativity 6. If you can figure out what classification a company is, that's going to be very helpful for an underwriter to put them in the right risk bucket and associate it with the correct, workers' comp risk area, or potentially like compare it against other groups in that classification. The second thing that analytics does beyond breaking things out is, helps you understand a data set. And I think, auto is one of the best examples of this, because traditionally we use very imprecise ways to understand the risk of auto. So one of the biggest data sets that we use is credit score, because there's a lot of correlation between credit score and the performance of someone to have claims with auto. That being said, does credit score predict whether you're going to have an accident or not? I mean, I certainly hope not. You default on your credit card and then you crash your car. Like maybe there's some causation there, but most of the time it's not. What we really want to know is what are the other factors that are most proximately related to drivers' experience, responsiveness in different conditions, and ability to operate their vehicle. So if you're able to look at a large data set of your customer segments and really understand, in the state of Texas, people that have moved from the Northeast do much better when there's these cold freezes because they've handled, slippery situations better. And, maybe we should really prefer them and go after them because, Texas transplants are better drivers. Analytics is going to be able to help you to ask those questions, answer those questions, and test those assumptions.
I love that. It's not only a question of a correlation versus causality, which causality is very hard to figure out, especially with those numbers, but how can you improve the correlation and then add more data points for the decision for reducing the error or improving the probability that fits into that scenario. It's great. And from there, of course, so people can actually read it, give it in a nice report with beautiful colors and graphs. So going back to the conference, which startups are we going to see there that tackling those problems and serving the insurance industry? Are we talking also on MGAs that self-serving with their own unique proprietary technology, or pure tech that are looking to sell their services to carriers and other MGAs?
Yeah, so we're going to have a mix of both. I think what we try and do with our conference is to have carriers that are actually doing it on every panel. So every panel, you're going to see a carrier and broker that's trying to, talk with customers with AI, improve growth within specialty and commercial lines, or, be able to innovate while they're upgrading a core system. So, many of the traditional established vendors are going to be there, like the Carpa Datas and the Verists of the world, but we are inviting some of the emerging players. And one of the panels that I'm most looking forward to is our established InsurTech CEO panel. So we have Hippo, Root, and Cowbell Cyber all having their CEOs represent, and we're going to talk about what's their path to profitability. And I think it's a really good example because Hippo has had to deal with natural disasters. Cowbell always has to deal with the increasing persistent cyber risk, and Root has to think about how to actually make their auto book business profitable when Progressive can barely do it. So we're going to be talking about what they're doing to use AI and analytics on paving their path to profitability.
And now this is a great opportunity for me to ask Tony. Oh, Tony, go ahead, because I was looking for you to jump in, right? Going to ask you to jump in and use the analogy that I just fell in love with. It's like when we are looking at those CEOs and the programs and challenges that they face, how do we rank them in terms of belts? InsurTech founders Jiu Jitsu belts, to understand how they can overcome those challenges and be successful.
Yeah, so the actually panel that David described is called Path to Profitability. So, that hopefully we're going to kind of talk about that on the panel, and we'll get direct information from them. But what I know is just in general, a lot of the, InsurTech 1.0 startups that went public, or some they thought about going public and they kind of held off. They are definitely trying to be profitable, and it's just not easy. Being profitable means you might have to kind of slow down in your growth potentially, or and then decrease cost. So a lot of these companies have been doing this, and I think that's definitely helped them. I think also some of the companies that we've been talking to have definitely improved their efficiencies as well, and whether it's claims or also underwriting and also distribution channels. Many of them, not the companies that we might be talking to, but there's many who actually have gone back to agent distribution, which seems like kind of backward, but we know a lot of the life carriers, but life insurtechs definitely they've kind of gone back to agent. And so we start going direct to digital. They're kind of maybe supplemented and maybe expanding more on the Asian side. And so there's a lot of different things I need to do as a holistic solution that I can come up with. It's not easy. As you can see, some of the stock markets of the InsurTechs that went public, it's still a bit of a ways to go. But just based on what I'm seeing the market and hearing from the leaders, seems like they're on the right track. It might take a little bit.
Guys, we are super short on time. Sadly, you have a super busy schedule. Any last words, any things that people should know about the upcoming conference, startup competitions that you have? Otherwise, we can continue talking about how to pick successful founders and how to measure different investments on a later date.
Yeah, it's glad the activities we have for 2024. But if I have one ask for the audience here is come to our InsurTech Sprint Conference in March 20th to 21st in New York. We heard great feedback last year, especially on the fourth one, and this is our fifth annual one. We're basically keeping it similar to last year's experience. The theme is on AI analytics. We're going to have both P&C and life and health content. There'll be about 30 expos. There'll be later stage companies, also super early stage or early stage startup competition as well. So if you're interested in InsurTech and what's going on in AI analytics, definitely come to our conference.
Cool.
And check out our website, InsurTechNY.com.
So competition, fun, conferences, accelerator, so many different activities. David, any last words for the audience?
I would just say, join us March 20th and 21st. Look forward to seeing you in New York.
Fantastic. Gentlemen, it was a pleasure. Thank you very much for joining me.